Welcome to the Transparent FX Academy. I'm Nick and I'm a top pattern trading view with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical monthly demand and support area. In fact, from here, all this previous rejection to the upside was created. Again, here, the market tested its zone and rejected it to the upside. And what we can see here is that the market is currently testing the exact same area, has already started rejecting it to the upside. And from here, we could expect more bullish continuation to be created away from this zone. So from a monthly standpoint, everything seems very bullish. Now, if we drop down on the weekly time frame, what do we see? Well, from a weekly perspective, the first thing that we can notice is that we have a market here which has just shifted from a weekly bearish trend to a weekly bullish trend. In fact, the market clearly was creating here lower lows and lower highs, and now the market has shifted to creating higher highs and higher lows. We can see, in fact, a new higher high getting created here above the previous high, and we also see a higher low here above the previous low. And at this point, we just had the creation of a new higher high. So the next step, the next logical step would be for the market here to create another higher low and continue higher. So also from a weekly perspective, everything seems quite bullish. Now, if we look at the pattern that the market has been creating here, what we can notice is that we can see a very clear impulse to the upside followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements lining up exactly in this area, creating support in this zone that if we extend it to the left, we can see how is actually confluence of support, because we have both the 50% 0.618 Fibonacci retracements in perfect confluence with this previous level of weekly resistance, which now that the market has broken it to the upside and is currently retesting it, is turned support. So we have confluence of support inside of this area, inside of which we could expect more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. Now, if we drop down on the daily time frame, what do we see? Well, from a daily standpoint, we can see that in creating this move to the downside, the market is also currently creating this M pattern. Now, in general, after the creation of an M pattern, what we could expect, as I explained many times, is a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turned resistance here from a daily standpoint. So from a daily perspective, what we could expect is a potential rejection to the upside to be created away from this level for a completion of this M pattern at the neckline. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is essentially what hedge funds, so the big players in the market are doing and how they're moving their orders, the first thing that we have to keep in mind is that if we are checking the data for the NZD, we are actually already checking NZDUSD because all currencies on the spot are traded against the USD. So by checking the data for the NZD, you are already checking NZDUSD. And what we can see here is that with the last reports, net positions have been massively increased. We went, in fact, from having a negative net positioning of minus 19.6k net positions all the way up to having now minus 3.6k net positions. So institutions have been moving back to the bullish side for NZDUSD. We can see, in fact, how they increased their longs from an institutional perspective, going from 7.9k all the way up to 14.5k, and the shorts got decreased from 29.7k all the way down to 18.2k. So institutions clearly have been moving here to the bullish side for the NZD. And if we remember that we're already checking NZDUSD, this means that actually they have been moving to the bullish side for NZDUSD. So keeping that in mind and moving back to the technical side of this market, what we can see, well, combine this with the fact that we have already seen that monthly, weekly, and the daily time frames all seem quite bullish. This means that this M pattern that the market has created from a daily perspective definitely has a good probability of getting completed. So we could expect more institutional longing to be happening inside of this support zone that at that point would increase the probabilities of a potential rejection to the upside for the completion of this M pattern at the neckline. So what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect at this point is that if the market from an intraday perspective would shift from an intraday bearish to a bullish market at that point, I would expect a potential move higher for the completion of this M pattern at the neckline with good probabilities. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to get access to the most complete, all-inclusive mentorship program. And you will see me here that in this video, I break down exactly everything that you gain access to in this amazing mentorship program. And if you continue to scroll down the website, past the testimonials, you will see that you will have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out at least as soon as possible. The link is both in description and in my bio at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.